Thank you very much. Hi, good afternoon, everyone. I'm very happy to be here. My name is Jeremy Ng. I'm the founder and CEO of Open Eden. Now, before I begin, I'd like to get a sense who am I speaking with. So can I have a show of hands? Which one of you is from a crypto or Web3 project? One, okay. And how many of you are from a traditional finance background, like in finance or in banking or in payments? All right, so about 1/5. And so what about the rest of you? A crypto-curious investor? Not that many. How many of you have invested in crypto? Can I have a show of hands? Like bought some Bitcoin or Ethereum? Okay, I think it's very interesting. Look around. It's less than 10%, which means to say a lot of you have not invested in crypto, are not working in a crypto company, but are obviously curious enough and interested enough to spend your Sunday afternoon here listening to me speak instead of chilling at the beach or something. So very good. Now, a bit about myself. Now, I came from both traditional finance and the crypto world. I spent 20 years in investment banking. So I was working for Goldman Sachs. I was running their structured products, derivative business, both in Hong Kong and in Singapore. And 5 years ago, I left banking after 20 years and decided to move into the dark side. That's what they call it. And I started the Asia business of this crypto exchange called Gemini, who was owned by the Bitcoin billionaires, the Winklevoss twins, back in 2020. Built that business from ground up, 0 to 50 people. And then I left in 2022 to start Open Eden. And Open Eden is an end-to-end RWA tokenization platform that's fully regulated, and we create products that are regulatory compliant and also very in the crypto native way that is very suitable for users in the crypto space. Now, today I'd like to speak about stablecoin. How many of you have invested or used stablecoins in your transaction or in your trading? Can I have a show of hands? Okay. How many of you have heard of Tether, USDT, the largest stablecoin in the world? All right. It's good. We will spend some time to kind of walk everybody through and have a bit of, I wouldn't say educational, but just interaction. Now, stablecoin market, for those of you who are not aware, is the second largest crypto market, apart from Bitcoin. Now, I just came back from New York last week to attend this conference called Digital Asset Summit. So it's a very institutional event where crypto natives are not just the normal people kind of like punting in crypto, but people in the institutional world. So a lot of banks were there, a lot of large payment companies were there, and President Trump recorded a short video, and it was played in the main stage to address all the attendees. And he mentioned two coins, and guess what they are? Number one is Bitcoin, and number two is stablecoin. So clearly stablecoin, following up on the panel that we saw earlier, talking about RWA, real-world asset tokenization. And actually stablecoin is the largest product market fit for RWA tokenization. Because stablecoin is nothing more than a, say, tokenized cash deposit, tokenized money market fund that is being used on-chain. And you can see over here, right? Over the last 5 years, the stablecoin market cap has grown by 5,000% compared to the overall crypto market cap that has gone up by about short of 2,000%. So it's growing faster than the overall crypto market. Now, maybe I'll kind of quickly go through a couple of different types of stablecoin in the market right now. So over here, the first set of crypto stablecoins are what we call traditional fiat-backed stablecoin like Tether and Circle, the two largest stablecoin. And they're essentially a token that has reserves that are consisted in cash deposit in a bank, and for the most part, US Treasury bills, short-dated. Now, the second type of stablecoin is what we call crypto-backed stablecoin. For example, DAI. And it is a stablecoin that is backed by crypto asset. So for DAI, they use Ethereum and USDC primarily to provide the collateral for their stablecoin. And number three, the third type is the very famous algorithmic stablecoin like UST, Luna, and Frax. So UST no longer exists anymore. So basically, these are the type of stablecoin that uses certain quantitative model to back the stablecoin by the issuer's own native token. And unfortunately, that didn't end very well back in 2022. Now, the latest type of stablecoin, which is really the most exciting type, is yield-bearing stablecoin. And for example, there is Ethena that uses basis delta neutral strategy to generate yield and back the stablecoin. And over here, this is Open Eden, Open Dollar, which we will share a little bit more. Now, are all stablecoins made equal? Are they all the same? Now, they all try to be pegged to US dollar. So essentially what a stablecoin does is it is a digital US dollar that you can use on the blockchain for trading, for transaction, for payments, and every good things, right? And they try to maintain its value 1:1 to the US dollar. But there are differences. For example, some stablecoin gives you yield and some doesn't. In terms of transparency of the underlying reserve that's backing the stablecoin. Number three, regulations. Most are unregulated, some are. And the inherent risk that you are taking in terms of the counterparty risk of the issuer. Now look at this, for example. If you look at three of the top stablecoin out there, right? Tether, Circle, FDUSD. I think what you can see here is, in general, they are primarily unregulated from an issuer standpoint. And a very important thing to look at is bankruptcy remoteness. What it means is that is the issuing vehicle that's issuing the stablecoin bankruptcy remote from the operating company or the parent company, that if there's anything that happen, like an insolvency event, can they then dip into the reserve that is collateralizing the stablecoin? Now, if the issuer structure is not bankruptcy remote, then as a holder of the stablecoin, you are subjecting yourself to a counterparty risk of the issuer. And as of today, it is unclear that if any of the three have used a bankruptcy remote structure. And that is sourcing from S&P Global's assessment of the stablecoin. And in terms of transparency, it's either from a monthly basis or quarterly basis. They will show you a report of what underlying assets they have in the reserve that is backing the stablecoin. Now, all the three different stablecoin has depegged several times over the last couple of years. And the one that's most recent is FDUSD that depegged last week in the secondary market because there was some allegations against them that their reserves are not fully protected. Now, if you compare that with USDO, Open Eden stablecoin, it is completely different. Number one, it is fully regulated out of Bermuda, which is the same regulators as some of our good friends like in Coinbase, Kraken, Circle, Hashkey. And the issuing structure is through a segregated asset company, which is fully bankruptcy remote and regulated as such. So what it means is that if Open Eden as an operator or as a parent company get into financial issue, insolvency issue, the assets that is collateralizing this stablecoin USDO is fully safe and protected and ring-fenced against the insolvency of the operating company or the parent company. So as a holder of that stablecoin, your funds are what we call it SAFU, safe. And not only that, it is fully collateralized by a tokenized T-bill fund that is also an Open Eden product that is managed by a licensed fund manager, has daily reporting by independent fund administrator. And because of that, the collateral of USDO is always on-chain, is 24/7, fully verifiable, public. And last but not least, it produces yield and giving back, as of today, about 4% of the underlying yield that's generated by treasury bills back to the holders of USDO. And now these are some of the other type of stablecoin that are backed by other form of assets that either come from the form of crypto derivatives or private credit or another form of algo, and they all have experienced depack in the secondary market, in times of distress. So I think what the previous slide was trying to share with everyone is that there are a proliferation of new stablecoins coming out in the market because it is a very clear product market fit. However, as a user of stablecoin, you need to be very clear what are some of the risks that you are assuming. And there's nothing like too big to fail. We've seen that back in 2008, 08, 09, where even Lehman Brothers, one of the biggest financial institutions, can fail. And not that long ago, we've seen FTX, at that time was the second largest crypto exchange. Genesis, the largest crypto lender, where the list goes on, they all can fail. So you've got to be very careful and looking into whether the issuer is regulated, the structure, if it's bankruptcy remote, whether the reserves, are they fully transparent in order to protect yourself. Now, JP Morgan has recently came out with a report to say that yield-bearing stablecoin market, which is right now contributes to about 6% of the total market cap of all stablecoin, it will grow to 50% minimum in the next couple of years. And I think there's a very good reason for that. Because a yield-bearing stablecoin trumps the non-yield-bearing stablecoin for a very obvious reason. One, it has all the accessibility and interoperability and utility of a standard stablecoin, but it gives you back the yield that is generated by the underlying reserve. And I think that is only fair because if you take risk on holding that stablecoin, you should also enjoy the rewards, or at least part of it. And I'm sure a lot of you are very familiar with Yuepao, which was one of the largest money market fund. And that is exactly that, because when you are holding your asset in a wallet or the likes, and if you can generate interest when you're not using the stable coin or not spending it, then you effectively have become your own bank. And you do not need an intermediary to pay you the interest. You just hold a stable coin. In this case, you can consider Open Eden's USDO in your wallet, and every day it increases in the balance. And when you need to use it and spend it, you can then move it around with no lockup, right? So it's a safe collateral for lending and borrowing. It is obviously very yield efficient, especially if you are a trader, that you can use a yield-bearing stable coin as a collateral on the exchange or on the decentralized exchanges and trade. You have a native yield that kind of comes from the yield-bearing stable coin while you use that to generate other returns in the form of your own investment. Now, this is also very interesting in the payment side of things that you can use, as I mentioned before, for cross-border payment. And a lot of companies, they keep a certain amount of float or working capital for them to make payments and transaction. Now, if they are keeping it on their own wallet, they don't generate any interest. Unlike in the traditional world where we put our money in the bank, at least they give us something, 0.2%, 0.5%, at least there's something. And now, with you bearing stablecoin, you are able to hold your balance and still let your money work for you while you're not doing anything at all. So that is a huge innovation, and that is something that I'm super excited. OpenEden is super excited to bring that, to the market. So, last but not least, Open Dollar is yield generating, is regulatory compliant, and is fully transparent and composable. So if there's any way that you feel that we can work together, please scan this QR code and join our Discord, join our Twitter, and join our Telegram, and we can chat more and see how we can bring you greater utility. So thank you very much for the time here.